to today's packed video, which is called S&P 500 Crash. But why? Why? We will dive into all the reasons you already seen me tweeting, and we will examine very practically what the charts had been telling us throughout yesterday and why the game has changed again. It's not been about Nvidia earnings relief and rebalancing from the excessively bearish positioning of basically half the universe. It's not been about the not really stagflationary data when it comes to GDP, orders and unemployment claims. It's been about the tariff news, because having to count on 25% Mexico-Canada tariff starting early March and hiking up China tariffs by further 10% and Europe on the chopping block for 25% as well, that's not small thing. How to say it nicely. It raises questions about what's the status of international trade and what that will do to company earnings going forward, introducing tremendous uncertainty. Tremendous, just. You know pretty well what I do on my side. This video is going to be divided into two parts. We will very fast examine the yen carry trade situation, because it's somewhat creeping into the headlines, and I do not see the efforts to link yesterday's sell-off to this situation, to the land of the rising sun, as very, very fitting analogy and reasoning. And in the latter half, we will dive into practical charts of S&P 500 from various timeframes, starting from 4 hours, going all the way to 5 minutes, examining the print of what the news had done, and you will learn plenty about identifying bottoms, where to expect such a bottom, and why such an immense importance of yesterday's tariff news, hiking uncertainty, which was the culprit, the actual culprit that did sink the markets. Otherwise, all those who have been calling for a break of that support that it had been hinging on at the 4-hour chart that I had tweeted about and that I will show you would have been cooked, because equities had pretty good chance of holding that support, building there, and slowly repairing the damage, the way that we see pre-market of quite oversold readings. But you will learn once again more about bottom identification. Circling back to last summer and to the post-yen carry trade fears unwind, this is the US dollar to Japanese yen trade, foreign exchange rate. You see what a stark appreciation. This is not at all comparable, even accounting for last 5 days, to the current situation. So strike 1 against the yen carry trade as the driver. Japanese government bonds, yield of the 10-year bond, how it had been then, and what it is now. It is certainly sensitively reacting to the global retreat in yields, and yesterday's move does not in any way count as a spike that would sink global risk appetite. Definitely not. Strike 2. Volatility metric. VIX. Simple plain VIX. You see how the situation calmed down last year. I will be linking to Saturday's extensive presentation where I dive into way more metrics and commodities and oil and you name it, how equities as well have been reacting back then and now, and you will see very clearly how incomparable to today the situation is right now. wicks to forward-looking wicks, volatility of wicks. That's been done, and this has been the situation prior Friday at the close. You can see that the pressure is slowly building up. However, it is not at all panicky, it is not at all biting, it is not in the spotlight, it is very much on the back burner back then. So what had changed within this video? Thank you for liking these videos and subscribing to the channel. I'm showing you with focus on volatility how we will go about identifying the real bottom given the tariffs game changer in the early afternoon New York time yesterday. So that's wicks then, and this is wicks to forward looking wicks ratio. How it had been looking after prior Friday, nothing concerning. This is how it's looking now, with clear focus that the fear is not running rampant. For all the nasty decline in S&P 500, it's been relatively orderly, and this is one important takeaway. Wicks to forward-looking wicks. No panic, no rush to the exit door currently. This and the preceding slide have been yesterday closing values. So where could we reasonably be looking for a bottom? For a tradable panicky bottom, where it would make sense to go significantly in with a long and not just dip once toe and risk maybe 10, maybe 12 ES points, but no more, with lightened position sizing, which was the correct way, by the way, to approach yesterday's bumping around supports. This is one of the key tweets that I had made. You see that the second dent, the second top higher, denting right away and crashing, had not been the result of economic data, however only of the subsequent tariff news and an attempt to retrace that. You see how both the force index and the MACD histogram had been quite possibly making in progress to be confirmed bullish divergences. So I had highlighted two scenarios. Either prices go on slow recovery and building the bottom and slowly grinding up, or we would see quite steep sell-off and very fast we got the letter B out of those opportunities, out of those two possibilities. I will be as well linking to yesterday's video where I talked about the mixed breadth signals that were quite on par with the entry to this week. So the second tweet that was worth making was this very European morning. So in case you are based in the United States, you had not seen it just yet. Therefore, I'm bringing it to you right now. We had seen that in the sell-off, high beta names had been hit significantly. What I did not mention, and mentioned only in passing, whether in the premium channel or in prior tweets, had been the fact that financials had not been hurt. So this adds, and they actually closed green on the day. So this is more about the high beta versus low beta rebalancing forced by the tariffs uncertainty. Otherwise, the S&P 500 pattern of lower highs and lower lows for now continues, and as said, the focus has shifted from the recovery of Nvidia earnings or other earnings, and frankly, earnings lately have not been stellar, really. So we will dive into the question how close to a capitulation we are. I had already shown you the volatility approach to this. This is the promised 4-hour chart in great detail, where you can see as well that that the situation was pretty even in the short run, and notably, if you connect the dots, the subsequent decline was not at all accompanied by nearly enough the same degree of panic as shown in wicks or wicks to forward-looking wicks. This is how the hourly chart looks currently. We are seeing another recovery attempt following yesterday's flash. First asked questions later, but what I would highlight your attention to is when yesterday it started to make that intraday top. Was it the first small red candle did not happen on economic data release. It was slight hesitation that was easily retraced back, so that was not what made S&P 500 keel over. You had seen as well not just one sizable or two sizable upper knots wicks on those hourly charts. These can be counted basically on the 3 and more. 3 and then 2 more candles attempting to hold the horizontal support. This clearly shows that it was following the tariff news, the rush to the exit door, and the news itself that had sunk S&P 500 yesterday. And that's why I say that not those calling for yen carry trade or charting fine targets based on volatility, where it could reach. Sure, I had shown you where it could reach and where the reasonable bottom is to be made. However, this is not a timing tool. You never know which day exactly that volatility reading is to find the bottom, the buyable bottom, the blood in the streets moment. So this is an objective, honest representation of the facts, what had been the drivers, and we can go into this 5-minute chart that shows the progression of retrace attempts and defense of that horizontal support, that it had not been a clear-cut case where equities would just keel over and go south. The buyers had the opportunity to stabilize prices, and after a long fight, it did not work. And again, as I say, what is troubling is that it was not accompanied by commensurate increase in VIX or VIX to forward-looking VIX. That's why there is some pain ahead. And the question is, when are we going to get it? Looking at the pre-market and assessing the negative sentiment we are going into core PCE with, it does not seem all that likely that the flush would, with same force, continue today. Because what has been the hardest hitting thing? What has been the catalyst? Tariff news. Tariff news basically left and right. And this is a feat that is unlikely to be doubled or repeated or even tripled today. So that's why I think that today is going to be more of a retracement up day. And the purpose of this video was as well to show you that the buyers yesterday had pretty good chances, because what had been the key worry hanging over the markets? It had been the stagflationary boost, the dreaded recession, the growth scare, however you name it. I've been covering it in latest videos. All these videos are connected to each other, so make sure to review them from beginning to start, because I cover a lot of stuff unscripted. A lot of stuff. And you talk to me in the meantime, and that influences what I will put into subsequent presentations, and basically you are driving the content. And I have not talked about crypto flash. That had been another timely call for the floor to start giving in this Sunday. And that was exactly the situation at the beginning of the week. And you saw exactly the same reversal in Bitcoin. You saw MSTR hit. You saw Ethereum. Very clear signs. Very, very clear. So much for the strategic reserve. You know pretty well my joint page, helping you select what's right for you. I highly recommend combination of daily analytics together with the intraday channels. That's the greatest value there is in it for you, and it's not at all time consuming, so even if you are short on time, you can enjoy very, very easily. You know my professional journey and all the obstacles I had to overcome to serve you unrestricted. Obligatory disclaimer, and in advance have a great Friday. Let's talk soon, and smashing entry to the upcoming weekend.